You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, Hump Day. Have you seen the commercial with the camel and the Hump Day and the whole? Yeah, it's pretty good. That's a tough act to follow. Anyway, welcome to the show. Thanks for being here. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're glad to have you with us. I've got a chart up of the S&P 500 Emini Futures. If you can't see it, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in 30 seconds, and we'll see you here. And you'll see the charts. If you're not in the office, away from the desktop, go to youtube.com/CFRN/live during the show, and you'll catch the live simulcast. And thanks to the good folks at YouTube for carrying the show. Okay, S&P 500 Emini Futures. We'll talk more about this in a bit. The purpose of the rectangle across here is to just give you an idea. Now, these are this week's weekly trading zones, 2 of them, and as you can see, we're caught between them, have been for the whole week, which amounts to yesterday and today so far. Yesterday we broke below the area, couldn't make it to the zone. Then in the same session, and we had a 10-point run up in the S&P, a 100-point run up in the Dow during that 30-minute window that we always tell you to watch. Into the live training room to the beginning of the radio show. Now, the closing of the live training room, that coincides with the close of the London market. So that's why we see this type of a reaction. Now, we don't see a 10-point move in 30 minutes every day, but quite often, keep an eye on it, you'll see significant movement in that period. All right? Okay, so we break below, we break above, and then we end up right back here, stuck in the middle with you. Tried to make a run to the upside, couldn't quite make it. Retracement, leg, retrace, leg, another retracement. And we have the Fed announcement this afternoon, or the release of the Fed minutes. We had the Fed announcement a few weeks back. And because Jerome Powell spent so much time talking and answering questions and doing his best, his best showing yet, to calm market jitters, he obviously he did a fair job. Look where we are now compared to where we were. Okay, so what secrets are there left? Is there any new news that could come out in the minutes today that could give the market the energy it needs to break free of this? Because I got to tell you, this type of movement here, it's very tricky and treacherous, and it's best avoided until the market gets some kind of clear idea of what direction it wants to go in, or even attempt to go in. These are half-hearted attempts at best, and sometimes it may be difficult to see that structure if you're new to the markets. A little visual aid. Coming into yesterday, we got tied in a knot, and then we broke free, but got pulled right back into that snarl. And if we fail to make a higher high here, remember we rallied into the Fed announcement a few weeks back, a pretty strong one, and the rally continued. It was a huge day to the upside. Now here's the question. It was overdone, and over the next few days we saw the market come to its senses, but it still set the tone for what we've seen. And on the daily it looks like this right here. The last 3 sessions here, pretty flat. There was Friday's run up, and we haven't really been able to outdo that by much, just a little bit. So we're stuck. We're stuck until we aren't stuck, and we'll know when we aren't stuck because it'll start to look like that. That's tradable. This is a time to exercise your patience, to make sure you have patience, that you have self-discipline, because that's all that'll save you through here. Okay, let me give you the numbers from around the world, and then we'll go to Michael and get a recap of what happened in the live training room today. You know, Gary, I never saw, Gary just said that the Camel commercial is a repeat of the original about 8 years ago. I never saw the first one. Is this one better, or is it the same? If it's the same, they should have just used the old one. Oh, it's the same? Okay. You know, for the life of me, I can't remember what the Camel's trying to sell. Geico. There we go. Yeah. Now, that's sometimes when advertising might go a little over the top. I enjoy the commercial so much, enjoy the camel and his shtick, that I forgot that this was supposed to remind me to buy insurance. Geico. Okay. All right. Oh, yeah, I saw that one too. The pig going wee, wee, wee all the way home. I never saw, in their first incarnation, I never saw those. Okay, well, thanks, Gary. Our cultural reference historian. All right. These are cash markets starting here in the U.S. The Dow is up 6.5 points. NASDAQ is up 8.5. S&P 500 is up 3. The Russell 2000 is up 6. Now, what we were just looking at up on the chart coincides with the numbers I just gave you. We got no movers, we got no shakers. Again, the Dow up 6.5, NASDAQ 8.5, S&P 500 3, Russell 2000 6.5. So single-digit numbers. Okay. All right. Now, let's look in the commodity basket. Crude oil up $1.07. Inventories. Oh, the inventories won't come until tomorrow because of the holiday. So crude up $1.07 today. That's almost 2%. Trading 57.16 last. And gold up $3.10. Trading 1347.90 last. In the Asian markets, at the close, the Nikkei was up 128 points. Shanghai was up 5.5. The Hang Seng was up 285, and so that's a 1% gain, and it's the only sizable gain we see across the markets today. The FTSE closed the session up 50 points in the green. DAX up 92. That's almost 1%. And the CAC up 35. So it was a green day in Asia, green day in the European markets. And here at home so far, again, the Dow just tiptoed over into double-digit gains, up 12.5. Everything else still single-digit for now. All right, let's go to Michael and get a recap of what happened in the live training room. And then I'll be back with a little bit of something, because there's not a whole lot to say or do until we get those Fed minutes this afternoon and see if that's going to be the thing that puts a little fuel on the fire, unsticks this market, and gets us trending in one direction or the other. It doesn't matter which direction, as long as it's moving. That's all we need. Michael, take it away.
Dwayne, Michael's on the phone with
oh, is he on the phone right now? Okay.
Yeah.
Well, then we'll keep going. And he'll be done in a minute. All right, let's go. Val's supposed to sing? Okay. Well, I'll leave that up to her. I'll leave that up to her. Okay, Elon Musk, I'm sure you've heard of him. The founder of Tesla and SpaceX is once again making headlines about crypto. He recently went on the ARK Invest podcast to discuss the future of autonomous driving technologies. Most of the half-hour interview focused on the strategy behind his electric car company, but the topic of cryptocurrency eventually popped up in the last 4 minutes. Elon commented, "I think the Bitcoin structure is quite brilliant. There seems like there's some merit to Ethereum as well, and obviously others, but I'm not sure if it's a good use of Tesla resources to get involved in cryptos. We're really just trying to accelerate the advances of sustainable energy. One downside of Bitcoin is computationally it's quite energy intensive. There has to be some kind of constraint on the creation of crypto. It's very energy intensive to create the incremental Bitcoin at this point. It bypasses currency controls. Paper money is going away, and crypto is a far better way to transfer value than pieces of paper. That's for sure." So the crypto community took it as Elon signing off, but he's on a podcast. At least this time he behaved on the podcast, and so there shouldn't be any hopefully no flack from the SEC this time for Elon and company. Now, I want you to think, when he said, I think the Bitcoin structure is quite brilliant. You probably read of late or seen on the news that these genealogy labs that entice you with knowing your heritage and where you came from and who your ancestors were are cooperating with law enforcement agencies, and people are getting arrested left and right. We know that innocent people have been released. New television show, it's about the Innocence Project. They call it something else on the show. But I saw the first 2 episodes last night, and on demand. It was pretty good. Anyway, people are getting arrested for crimes they committed a decade ago, even longer. There's been a lot of these, and there's going to be a lot more, as apparently these genealogy labs, you would think there would be some kind of privacy issue in there, but apparently that got left out on purpose, because I think they'll all be cooperating before long, and cooperating with each other. So, all right, so we know what that means, right? You ever did anything wrong, you left a fingerprint somewhere, I don't know, pray, you know, live a good life. I don't know. I don't know the answer to that. Now, think about this. When our currency is digitized, and you have to believe it will be, whether it's called Bitcoin or Ethereum or CTG or whatever name it will have, cryptocurrency, it's going to be ones and zeros in a computer. That's really what our monetary system is now. There's a little cash floating around, but not a whole lot, you know. It's a very small percentage of our monetary supply. All right, so let's get beyond when that's going to happen and just accept that, yeah, it sure looks like the handwriting on the wall to me. Okay. Now, just as for a moment you were thinking back going, wow, did I ever do something wrong and leave a fingerprint and oh my, well, I guess fingerprints, we're talking DNA, so you had to leave some, at least some touch DNA. Okay. What if every dime you ever spent could be tracked? If you bought a chocolate ice cream cone when you were 15. Now, it's not going to say chocolate ice cream cone, although it could. But that transaction's on the blockchain forever. I'm sure we've all spent money on something that we wish we hadn't, and but hey, that's cash, which is, you got to think about this. That's that much more reason the government would want to put us into a situation, the powers that be, whoever that be, want to know who you are. They got that with your ID. Where you are, they got that with your cell phone. Who you are, where you are, and what kind of money do you have, and what are you doing with that money you have. That's the DNA of cryptocurrency. And that day comes, whether it's in your lifetime or your children's or your grandchildren's, where all transactions, currency type transactions, it's all digital. I mean, that's how you pay your bills now. In fact, it's how most people get paid. Some money gets deposited into an account and then they distribute it however they see fit. Whether it's your paycheck or someone paying an invoice for your business, whatever it might be. So, all right, let's go to Michael. He's ready for now.
Yes,
take it away, Michael.
I am.
All right.
I'm ready for now. Okay. Here we go. Oh, there. Okay, I should be looking at my screen.
Yep, that's true.
Excellent.
All right, I'll be back in a bit.
All right. Okay, here we go. Well, I just logged on, so I'm not sure. You know, Dwayne was telling you how flat these markets were and all that. What a mess they are. But we have FOMC meeting minutes coming out in an hour and a half, and that has played a big part in these markets today. But let's start off here at the top. If you have not taken a free trial with us, go to the home page. Oh, well, today is Wednesday, the 20th day of February 2019. If you have not taken a free trial with us, go to the home page at CFRN.net. Right over here in the right-hand column, it says 5-day free trial apply.cfrn.net. Click on that, and you will be brought to this page, where all we ask for is your email, your first name, how you found us, hit the submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial, so you got to click on that link, okay? Okay. We had a red day today. We only had 4 trades. We had 1 stop out on gold that we probably shouldn't have even taken, and we made 1 tick in the euro. So we're minus 73.75 on the day. On the month now, we're at 17.1750. That's over 13 days, averaging 132 per day. On the year now, we're at 3,748. So over 32 days, averaging 117 per day. 117 per day. Hey, look, 1717 and 117. I knew there was something that was striking about that. Okay, so the one trade that we took on gold was right here, and I was telling people that there's buying pressure right here, and it came up and it bounced off the BBC, and we took the bounce off the BBC, figuring it would get down here, back down to dynamic support. And we'd at least get our stop to break even, but it didn't do that. It just turned around and went right up to where I said it was going to go. I said, look for it. If it stops us out, look for it to get up to this level, and that's what it did. At the end of the morning session, there was another long trade. It was from right here, and that trade, well, it's still going. It's still going. An hour later. And that was it for the morning session on gold. Okay, on the euro, here, we had +1 tick. And that was all we had today on the euro. We had that one opportunity for +1 tick. Look how flat it was here. I knew it when I came in this morning and I looked at the markets. I looked at all the markets to see what was trending and what wasn't, and I knew it was going to be just a messy day. It looks like it had a nice trend, but not really. And crude, you're going to see a lot of things on crude that you would think there should have been trade setups, but at the time it was pushing in new highs all through here, pushing in new highs. So we couldn't do anything through there. So we had just the one trade right here on crude, and that was a break even. Okay, let's see, during the break, looks like there was a bounce off the BBC right here during the break. That would have been a nice trade. Okay. Then more recently, right here, a short, that would have been a trend line short for about 4 ticks. And that was it there. Now on the ES, again, when you can put the whole chart in one frame like this, you know, the whole day in one frame. We took a long right here. And we got a break even on it. And there was never anything else. During the break, let's see, during the break, you could have shorted nowhere. Over here, you could have shorted right in here during the break. It would have been one short during the break. Oh, that was fast. I know Dwayne's not back yet. But we only had 4 trades, so there's not much to report on today. But what I can do is bring you over here, and we'll go through this stuff again one more time. If you have not taken a free trial with us, go to the home page at CFRN.net. In the right-hand column, 5-day free trial, apply.cfrn.net. You click on that, you're brought to this page where all we ask for is your email, your first name, or how you found us. Hit the submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So in here, you can click on that button over there, or you can click on this one. This is going to bring you to another page that has start the free trial on it. and that will bring you to this page. Okay, that will bring you to that page. Okay, and if you click on this, it's going to bring you to the same place where it says start the free trial, and that will bring you to this page. Okay. CL 319 is your current contract. J9, yeah, you got to roll forward. HIJ, I think it's May. Right? March, April, May. Go where the volume is. Go where the volume is. Okay. And so on the spreadsheet, again, we had a red day today. So far, all our red days this month, knocking on wood, have been little. You know, minus 60, minus 30, minus 73. Whereas yesterday we were plus 275. That makes up for all 3 of those red days and then some. And then all the green days we had this month. But if you go back, again, it's the beginning of the year, so it's early on. And if you go back and you look at, you know, the monthly results for the prior year, then the end result for the year, or if you go back to the year before, let's see, scrolling. Here we go. Go back to the year before, same thing. And the year before that, where is it? Here it is. The year before that, it's pretty good. And you can see all the monthly results in here. January of 2016 was the best month of the year, looks like. Anyway, that is a spreadsheet. And let me just check and see who's in the audience here. Let me see if any of the guys who were in the room this morning are in the audience. Well, some of them are, but just to give Dwayne a few more minutes to get back, the columns in the spreadsheet over here, this is the number of minutes that it took to get the goal for the day. All right, red days, obviously, there's no digit in there. A number of trades to get to $100 per contract. I have to put a digit in there even if we didn't get to the goal, because down here, it does some math based on the number of trades and all that, net profit. Okay, and so all that is on the spreadsheet, and it's all there for everyone to look at. Yeah, let's see. What else did we have going on? I don't know. I guess I can say this. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. But I don't suspect Dwayne is there right now. He's probably still sipping a coffee, or pouring a coffee, or making a coffee, or something with coffee. I don't know. I don't drink coffee. Okay. Does anybody have any questions? Yeah, Bob Z. If you look here, GCLJ9 has 534,000 contracts, 535 now. And if you go back a couple, well, the H has 13,500. Big difference. Ah, okay. Oh, I can deal with that. I'm just going to exit that gold trade right there at break even. All right. Kapinski Mixoros.
Did you call me?
Yeah. I did. I'm ready to pass it back to you if you're ready.
Yeah.
Okay.
Hang on. Hey, we got charts. Garrett's going to pop in, so if you got to run, that's okay.
Okay.
He and I are going to chat. So he's got should show up on the organizer side.
Yeah, he's not there yet.
Yeah, I just got off the phone with him.
Okay. All right.
And I think he comes in with a hot mic. So, in fact, last time he came in, it was real hot. Okay. All right. Okay, so I got the charts. Very good.
Yes, you have the charts.
Okay, dope.
Okay.
Oh, recap
Right.
of the recap. Was there a recap?
Oh, we had a red day today.
Yeah, that's
We were
right.
down $73. Yep. 4 trades, 2 break evens, 1 +1, 1 -8. So it happens.
As long as we stay tight in this knot, I won't put out another alert. It's just
it is a mess.
Makes no sense.
It is a mess. Yeah, we had 1 break even on the ES this morning, 1 break even on crude, 1 +1 on the euro, and 1 gold -8 that I probably shouldn't have done because there was buying pressure right at the swing low, and we sold into. Well, I mean, we had about 8 ticks to get there, so I didn't think it was going to be a big deal. We'd get our stop to break even, but turns out we didn't. That 1 trade on crude that we had a break even on, we had +5 on at one point, but then, I mean, crude was going up and it was in a nice trend, but it kept going into the high of the day, and that was preventing us from taking trades.
Inventories come out tomorrow, right?
Yes, tomorrow at 11 a.m. Crude inventories. API numbers come out this afternoon at 4:30, and natural gas comes out tomorrow at 10:30. There's a bunch of news coming out tomorrow. Bunch of news tomorrow.
Take a look. Tomorrow. Now let's look at this week. Okay. So Thursday. So 2 o'clock today. We get the FOMC minutes, and then tomorrow, right after the London Open at 3:30 a.m. Eastern, there's high impact out of Europe, the German manufacturing PMI. So if you're trading the London Open, keep an eye on that. And then the ECB publishes a count of monetary policy meeting. I guess that's their version of the Fed minutes. That comes out tomorrow morning at 7:30 a.m. Eastern. Then we got core durable goods here in the U.S. at 8:30. And then we've got the Philly Fed at 8:30. Those are both high impact at the same time. And then we've got at 10 o'clock existing home sales. That's high impact. Then crude oil inventories, high impact. And there's a high impact out of Canada as the Bank of Canada governor, all the central banks are talking and releasing notes right now. Wonder what the greater conspiracy is. And then on Friday, Europe's got the CPI, high impact at 5 a.m. Eastern. And then Canadian retail sales. ECB President Draghi speaks Friday morning, 10:30. That's always good for a laugh. The Fed Monetary Policy Report, high impact. Fed Monetary Policy Report. I don't recall seeing that before.
The Fed monetary policy. Let me go and look at my stuff. And that's on Friday, you said?
Mm-hmm.
Oh, that's Saturday.
It looks like it comes out twice a year. That's why it's not a. Like in 2018, it came out February 23rd and July 13th.
Yeah. The next one is July 12th. After this one, the next one is July 12th.
So this is kind of a big deal.
You would think. I have it as a low impact, but
do you?
You would think it would.
Yeah, I got three steer heads over here.
Do you?
I do.
Let me go look. Let me go look at what Daniels has it as.
Here's mine right here. Fed monetary policy report.
Yep.
High volatility expected. And then all the FOMC, everybody's going to speak. Bullard and Harker and Quarles. And then that's it news-wise for the week.
Wow.
Holiday in Russia, Saturday, all day. Defender of the Fatherland Day. So, how do you, fatherland, motherland, who determines that?
Yeah, I don't know.
It's interesting. Gary probably knows.
Probably. Yeah, Fed monetary policy report. Yeah, Daniels has it as a 2 exclamation point.
Yeah, we'll see what happens. See, the fact that it only comes out twice a year seems like it would give it a little more impact.
You would think.
Oomph. Yeah, we'll see what happens today. Okay, Garrett. I can't wait all day. Said he was going to pop in here.
Yeah, I'm looking for him. He's not in yet.
When I said right now, he probably thought I didn't mean right now. Change this phone. Yeah, he's trying to get logged on right now. So,
Oh, okay.
all right. So I'll go back and take a look at the S&P.
All right.
Okay, guys, we had this little run-up this morning. Started about 8:30, and we didn't put in, well, we put in a lower high. High, lower high. Now, keep that in context with this daily chart. Where we have a high, a lower high, another lower high. Now this goes all the way back to, now this is September, October of last year. And as we came down into Christmas, and then the magic of Christmas took over on December 26th. We had a huge bull bar leg and a retracement, and right up to where we are now. So for 3 days we've been rolling sideways. Could this be another lower high? Could be. We've got a nice run. We've had no retracement. So just a retracement from where we sit right now at 2775-ish. A 50-point pullback would bring us near the BBC, which is the natural thing to happen. So, is it going to happen here? Could we spike a little higher? Yeah, we could. That's what makes this such a sticky area and such a difficult area to navigate right now, because you've got forces that want to propel you to new highs, and you've got forces that want to keep you down. There he is.
Hey.
How are you?
Good morning. How are you?
Yeah,
I'm good.
You come in with a hot mic.
You know what?
That's okay.
That means that it's more louder than it should be, right?
No, it just means that as soon as you log in, it's turned on.
Oh,
I don't know why. I don't know why they do that, but yeah. So anyway, for those who don't know, this is Garrett, longtime friend of the show, money manager extraordinaire, and among other things, Renaissance man. How are you?
I'm good. I'm good.
You popped in the other day. I heard you pop in, and I was trying to get your attention, but I don't think you knew your mic was on, and then you left. And I sent you an email, and I said, "Hey, come back."
Oh, I remember one of those, and then I came on a couple of other times and was trying to get ahead. I was kind of pressed for time, and you were, you know, in the midst of doing some good stuff, you know, doing your stuff, and so I just I figured, well, I better jump off here.
Well, I'll tell you what, until this market breaks out of this consolidation that it's in right now, we got nothing but time.
Yeah, it's crazy. I've got some stuff I thought might be interesting.
Yeah, let me pass you the baton here.
Yeah, I just did a observations. I've got 2 screens here. I don't know how that's going to work. Let's see.
Okay, I got a bunch of small charts.
Yeah. Let's now. Can you go to the or that you're seeing that one side? Let me pull this.
What I see now is I see a big chart of the Dow Jones Industrials, and then you just drug another window in.
Yeah. Now, do you just see one window, or how does it work for you?
Okay, I've got a huge chart across the back, and then I've got a small window in the middle. Now I just see what you just drug in.
Okay.
Which is what I think you wanted us to see. The observations. Yeah. Okay.
Now let me see if I can move. Okay, there we go. This is the observation issue that I wrote yesterday, and there's a few things on there that might be interesting to your audience. FOMO.
Fear of missing out.
That's the one, and actually, typically what happens is that you get, you know, a real good strong market, and then you get everybody that jumps in for fear of missing out, which is not necessarily the best way to best reason to buy, but it's worked out so far. Here's some of the things I wanted to show. Now, ironically, I think the new numbers come out today, so these numbers are a week old, but nonetheless, what this chart shows here, I can probably blow that up a little bit. Let's see. Anyway, what this shows, if you can see that,
no, that looks good.
Is it shows, you know, the movement up from the December low, but this shows portfolio cash allocation, and it's an inverted chart. But at the time when they did this a week ago, there was only 13% of funds allocated to cash, and that, and again, this is the AAII. Their reading. Other people have different types of readings, but theirs goes back, I think, into the 1970s, and that is the lowest amount of cash going back to the top in 2000. So that's saying that, okay, there's these people, for whatever reason, don't get down to a lower level than that. So maybe we're there, and their bullish reading was 78%. Which is very, very high. And I was looking at, I mean, some of the things that, you know, for example, the peak on September 21st when the market was way up there, that sentiment reading was 83%. They were 78% as of last week. I wouldn't be surprised if they were 80% this week, but I don't know what the numbers are. But by comparison, they showed that down here at the bottom in 2002, there was 39% cash, and then over here after the real estate collapse in 2008 and the market drop, they had 44.8% cash. So
of kind of cash that was left.
Yeah, I mean, no, that was the amount of cash they had in their portfolios. So in other words, they went to very high levels at that time because of fear, and here we're, you know, way at the opposite. Now this, I was trying to find a chart that might combine these things and just show where the market was when that happened. And a fellow named Dana Lyons has a Tumblr post, and I happened to find this, which was fairly timely. And what he did in his situation here is he took the stock allocation numbers, and this is this shows when there was a combination of greater than 70%, and of course we're at 78%, and when cash was less than 14%, we're at 13%. So we're, you know, way beyond that. But this just shows those. And the 5 times that that's happened in the last, whatever they've done here, 30, 40 years, there were 2 times. One of them was in March of 1998, and of course that was right before that correction that dropped things down into later 98. And then the other one was in December of 1999. The Dow topped in January of that year. The S&P topped in March. But and then recently, you had them happen right there at the going into the peak in 2018, and once again now. So we don't know what's going to happen now, but we know that the last 4, you had serious correction here. You had you had an 83.5% loss here back in 2000 in the Nasdaq 100. The peak to valley loss was 83.5%, which is a pretty big drawdown. But that was, you know, pretty much because of the tech stocks.
Right.
And then
.com bomb.
Yeah, here was the last real correction that you had before the market ran up to that final top. So anyway, that's kind of interesting. The next chart I had, let's see if I can make my clicker work. This is kind of interesting. This is the New York Composite, and maybe I can get you a better chart. Let's see if I can. Well, apparently not quickly. Let's see if I can do it here. There we go.
There you go.
Okay, hopefully that's fairly clean on your end, or clear. This is the February low back in last year. This is the December low last year. So these are, you know, major lows. I mean, fairly historic. And the old thing is you take your trend line, you parallel it off the high in the middle and see where you are. Now, as of yesterday, we had just moved up to this line. Today, we're flirting with it and so forth. But with this kind of a move, and I'll get into this a little bit later, you would think you'd have a correction because, frankly, nothing's changed from here to here. You know, when we were down here and where we are now, there's no change. We haven't had any agreement with China. We have, you know, nothing other than what's been going on has really been happening. So what I wanted to do is I wanted to show on this chart that not only do you have this resistance here, but you have each of these prior highs coming across, giving resistance there as well. And in addition to that, you've got the channel that you're in the near term, which goes right there as well. And I'll show you a couple of other things that happened yesterday. Now, frankly, if nothing happens in a few days, then something else is going on, and I guess we should prepare for whatever. But there's a few other things here that I wanted to show you that now I can take this and go to my other chart, and you'll be able to see it a little bit better. That one should be here. And if I blow this up, hopefully it'll be a better picture.
Yep.
This is the Dow Jones Industrials. These dotted lines here, the Bollinger Bands. Bollinger didn't invent them, but he was smart enough to give them his name, so we all use them now. But basically, they're just price bands that go maybe 2% on either side of the recent price. And here's what's kind of interesting. If I blow this up, which I can do, I'll show you what happened. This is the can you see this okay?
I can see it, yeah.
Oh, good. This is the Bollinger Band. The day before yesterday, or Friday, we had broken through it and closed above it right here.
Right.
That's what I wanted to point out. Yesterday, although the market went higher, we actually closed within the band, and we're within the band today. Now that I think is important, but I'll show you why. The last time that we've closed above this band was back over here on November 7th. And if we blow that up, we can see that there we are. We did it on November 7th. Yep. Again, the market went higher, but it closed lower within the band, and then this would be the equivalent of today. Right. So far, let's see if I do that first. Now, so that's
I'm not a Bollinger guy. I'm not a Bollinger guy by nature, but you make a compelling case.
It's a tertiary indicator. It's not. I mean, one of the things that happens.
No, I think what you just showed me is the most useful thing I've ever seen with a Bollinger Band.
Yeah, it's finding. I think there's two things to look for. That the simple thing to look for is, have you reached the Bollinger Band? Yeah. And if you've come a long way. I'll give you the classic example. I mean, really a good example, and fortunately, it's a recent example. And that example is looking at the December low, right here. And here we got, now again, can you reach the band? I mean, here's a classic example too. Here we've been almost reached the band. We got up there again, reached it here, didn't reach it here, but we had a good correction here, a bigger correction here, even a bigger correction here. But look at this, you go from the band and now you hit it here. Is this a good buy? And the answer is, yeah, for a day or so, right. But then we're right back down, and look at this. When real selling comes in, you can hug that band and be down here. Now over here, here you can see, gee, buy it down here, sell it up here, and, sell it up here and buy it down here. And, here's the top and here's tops, and there's also, and here's a bottom, so gee, it looks pretty good, but you got to be careful, because here you hit it. And if you buy it here, you're going to be okay in a month. But in the meantime, you got a big hit. Now here, the trick is here you're outside of the band, and let me blow that up a little bit so you can see it. But rarely are you outside of the band. Rarely do you close outside of the band. This is kind of important. You closed outside of it here, but you're inside. You didn't close outside of it here. You closed outside of it here. You closed outside of it here. You closed outside of it here. But this is in a power. It's almost a waterfall decline.
Right. Exactly.
Yeah. Now, when you look at it here, you're here in my I can't remember my December 21st issue of observations. I said it's keep an eye on December 24th. It's a semi-holiday. The market's open half a day, and that might be a very interesting time for the guys who play with the market for us to turn the market. Well, look at that. That was the low close, and on the 26th.
We were just talking about the 26th and looking at it on a chart. Yeah, go ahead.
So anyway, now you've got this move, but here's what's happened. Between here and here, if you draw a vertical line, you've got a huge spread between the upper band and the lower band. Right. I mean, monumental. Mm-hmm. So when you've got something like this, you can pretty much buy this with impunity and not worry about it. It's that spread that's there. Now you're narrowing, but here's what's happened. You've gone from here all the way up to here, and now finally, this is the first time that you've gone outside of the band. Look at this move. I mean, it's enormous, 400 and some points on the S&P. So, I mean, it's a big deal, and you're really stretched out here. The other thing I wanted to point out, so anyway, that's where we are, and we'll see if it works this time. It should. The other time that we were above the band is over here on September 21st, which, now again, that was the top on the S&P. It wasn't the top on the Dow. The Dow topped on October 3rd. But here it is, and if you went short there, you'd be okay. You'd have a headache here, but you're okay here. If you did it in the S&P, you hit the top. But here's the thing I wanted to point out in this chart. These red arrows, that of course is the January high. 66 trading days. Boom, you've got a low. 66 trading days, you got a high. 66 trading days, you got another high. I mean, these are actual turn dates on those days, and boom, you had one over here this happened to be on Friday. So this one didn't work yet, but again, from where we were there to where we are now is almost identical. And although it didn't necessarily turn in reverse immediately on the day as these other ones did, it still might be a pretty good point. Now, going back to, if I go back to the chart, let's see, what's the easiest way for me to do this? Oh, probably just click on this. The next one I wanted to show you is really kind of interesting. And that's this. And let me see if I can find that chart.
Now, this past, was it, yes, Sunday night, we had a snow moon. Is that what it was called?
No, I'm going to show you that. It's good that you brought that up because I think it's a big deal. Here you go. Here we go. This is what I wanted to show you. Okay, this is the Dow Jones. I'm usually the guy showing the S&P, and I haven't shown you an S&P chart yet. But here's the Dow Jones Industrials. This is a weekly chart. So let me show you what I've got on here. There's the January high. There's the September high, and then here's this. Now, here's what happened yesterday. If you were outside looking at a clear sky last night, you saw a big full moon, presumably.
That's correct.
It's called a super snow moon. That just because of that's this time of year in February, that's what they named it. So, by comparison, going back in time, you had the harvest moon here in September. So those always come in at the end of the summer. Typically, they're huge moons. I remember when I lived up in Tahoe and drove over the mountain one night, and the moon was, I mean, it scared me. The moon was so big, right. I thought that we were going to have a collision.
I know there's times that you can, it's as if you could reach out and touch it. Or if you just,
it's unbelievable.
If you just drove down the street, just a couple blocks, I mean, you'd be right there at it.
Yeah, I thought I was going to drive. It looked like I was going to drive on. I mean, it really caught my attention. But and it's funny. And other times you can see a full moon and it's very small in the sky, and it's mind-boggling how that happens. Anyway, going back over here, here is a super blue blood moon total lunar eclipse. That was what really coincidentally turned the market down. What happened is you had the high on the 26th, you came down on December 23rd, you had 3 days, this is a weekly chart, but if you broke it down to a daily, you had 3 days in a row that had about the same price. The day in the middle was this full moon, and the day after that, again, this was the day in the middle. You had the next day, and then you just collapsed, and boom, 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 2 weeks later, you're down here. Blue moon means that you've got 2 full moons within the same month. So one was on the first day of the month and the other was on the 31st. Blood moon is the color that you see when you look at it, and then it happened to be a total lunar eclipse. After this enormous move, that was enough to turn this market down. Now you come over here, and now you make the new all-time high, and look when this moon falls. This is the September 21st high. This is the October 3rd high. Again, the market went higher in the Dow. It didn't do this in the S&P. But when did the full moon happen? Right in between. Right between both of them. So that kind of bodes pretty well for... I did a study years ago with a guy named Ian McAbiddy, who started the Central Fund in Canada. We were doing a study on the full moon. And it was amazing how often you'll have market turns at that time. But the key was, what you wanted to see is, are you moving, are you having a strong move or a very weak move into that full moon? And if you are, and if you're legitimately overbought or oversold, the moon has a tendency to, just like it affects the tides, I guess it affects the psychology of man as well. But anyway, here we are again, and now we're in the same situation after a remarkable move. Now, what I wanted to show you, which is really kind of blown my mind.
This is probably the most remarkable move of them all.
It is, and I'll show you why. It's a good observation. This move here over here is historic because you went for something like a year without as much as a 3% correction. That's never happened. That's never happened in the history of the market. So this one is something really special. And then here is the final blow off of that move, which of course is remarkable. But, and again, this move over here had all this behind it. This move here doesn't have anything behind it, but look at the move itself. Going from here to here, if I take this line, all I've done is taken this line, and I'll show you, move it over just like this, okay? So I can do that. This is the same line.
Yeah.
So, and I put it here, and you think, okay, well, that's pretty good because it's this move from this period here is just like this one. And I go, well, wait a minute. If we want to make a real comparison here, why don't, instead of moving it to where it went, why don't we just move it over to where it started? So I put a horizontal line in, you go to the past price, and I bring it over here, and that's what this dotted yellow line is. Here's what makes your observation such a good one, Dwayne. This move here is more impressive than the blow-off move that led into here because this one starts on October 6th and ends on November 24th, which is 2 full months before this one. This move that we've had right here, from here to here, is so much more aggressive than this move that it would have accomplished the move that this market made in less than 2 months. It would have done it 2 months earlier than this market did it, and this one was ridiculous in its aggressiveness.
Right.
I mean, everybody.
No, I follow you.
This one is significantly more. So, I mean, all things being equal, this thing should really, we should have a, this market is extremely extended. Now, does that mean it's going to correct? I don't know.
Let me ask you a question. You used the term overbought, oversold a minute ago, just kind of in passing. But that's one of those concepts that I've always had a bit of a challenge with. By your definition, your standard, what does overbought, oversold really mean? I know what it's supposed to mean, but in your words, what does it really mean?
You put me on the spot, which I like. I enjoy being put on the spot, so I must be insane. But anyway, here, let me show you. Let me tell you what I look at when that happens. These are a bunch of technical indicators that look like gibberish, I'm sure. But what I do is this. These are daily indicators over here. This is CCI. This is my own indicator, but it's based on a histogram of an MACD. This is a stochastic, and this is relative strength. So I kind of look and see where these are to determine what's overbought. Excuse me, or oversold. There's various degrees. So let's look at relative strength. There's various degrees of overbought. Clearly, if you're under 30, you're oversold. This is historic, and as you can see, you only have this happen a few times. I'm going to have to, I mean, here's the oversold in February after that top in 2018. We only got down to here. Here's the October low. Here's the recent low in December. So that's oversold. And as you get up to 70 here, it's overbought. Now here's where here's our run here. And ironically, we're just getting, to a true overbought level here. I mean, you're relatively overbought here and here, but you're finally getting up to it now. The last time we did this, August, at the end of August. But here's your overbought, and this is why this was such a remarkable situation last year, leading into late 2017. Look how overbought this market got, and it just kind of continued to move. I mean, here's a real pattern.
That's part of my point, is that a market can stay quote unquote overbought.
You're not going to see
for
that
a period of time.
Yeah, see, you won't see that going back. Now, it's nice to have things in conjunction. Here's the stochastic way up 96.21. Only goes to 100. Here's my indicator. Now, by the way, we were setting up for a divergent sell, which we got here, but it reversed itself, and now we're not going to get a divergent sell unless we create one. So this has gone higher than over here, and I'm on a buy signal from here. I'm getting what I would call, no, let's blow it up. I'm getting what I would call an early warning sell signal, and that's my internal indicator here being a little lower than the one before, and losing momentum of these bars getting higher. So that leads me to believe, okay, we're possibly going to get a signal here. We've got, as I say, an early warning signal. The stochastics are way up here and appear to be rolling over, even making maybe a head and shoulders type of pattern there. You're legitimately overbought here. These are like put call readings. These are other things. But this is the same thing as these four on a 65-minute. So yesterday on the 65-minute, we were getting a crossover and a sell here. We were getting a divergent sell on the 65-minute right here yesterday. And we're getting a turn down here and a turn down here. So that's kind of pointing it out. Now, if you, this is a McClellan oscillator. It peaked out over here early, but it's up in a pretty high level. This is a 10-day AD advanced decline 10-day differential up over 400. It's pretty historically overbought and has been that way. This is the AD line. It's very. I'm concerned that there may be some gyrations going on. Because the AD line has gone up without correction, yet the McClellan, which is based on the AD line, peaked over here, which is, a while ago. This date is, let me see what this date is. Well, it's very early. It's a, month and a half ago. It peaked out. How can this peak out with the AD line not peaking out? How can the 10-day AD differential, which is based directly on a 10-day average of the AD line, be moving down from here and having this line go straight up? And believe me, I've asked that question to people who've been in the business almost as long as me, and nobody's got an answer for that yet. Yeah, there may be something going on.
Let me ask this. I can see you have any one of a number of indicators that can graph for you this condition called overbought, oversold. But where do you think where did the original concept that something, let's talk about IBM, let's just IBM stock. What would lead someone to say the original concept, I believe this is overbought? What are we saying? People have bought too much?
Well, I think what you're saying is at any given time, you've got the universe of investors out there, whatever that is.
Okay.
And if you can mentally put them all in one room and make it 20 people, and throughout that evening you're going around talking to people, and after you've talked to the 20 person, somewhere in that conversation you've asked each one of those persons, how you doing in the market? Are you investing? And everybody tells you, so I'm fully invested. I'm enjoying this market. I'm fully in. You talk to 20 out of 20 people, everybody said that. Two things. Number one, everybody's in. So they're not going to be doing any more buying. And what happens, when there's no more buying pressure? So at some point, the whole
overbought, what you're saying is that overbought really would mean fully invested.
Yeah, overbought means that you've gotten to the point, at least at that point in time, where
you've satisfied all the demand that there is.
Pretty much, at least on a basis. Can more demand be created? Yeah, I mean, people can sell out of bonds and move into stocks, or various things can happen that can create it. But again, this is a game of probabilities and odds and so forth. So for example, you've heard the VIX indicator.
Yes.
This is the VIX. Hang on 1 second.
Go ahead.
Hey James, I'm doing an interview right now. Can I call you back? Thanks, no. Okay, I'm sorry. The basis of a VIX signal is this. Now, this one, I use a line on close signal. Can you hear me okay?
Yeah, I got you.
Yeah, okay. This is a true signal, okay? When VIX is the volatility index, so when it moves up and gets out of this line, then you kind of watch it, because now it's, you're running, and here what's happening? You're running and price down here. VIX is volatility's getting higher, and what happened here, just what we looked at, we're going down, making that low. When VIX comes back inside this line and closes, that is a VIX buy signal. Now again, in reality, it's a VIX sell signal. Your VIX is high, you're selling it, but I say it's a VIX buy signal because what we're concerned with is not VIX, we're concerned with the market. Are we going to buy or sell the market?
Gotcha.
So I call it a VIX buy signal, but if you really want to split hairs, you're getting a sell signal on VIX. Here you've moved below the and closed right here under the line. This is this solid line here is closing price. So boom, there's your signal right there. Look where you are down here. You're right here. You're right. I don't know if you can see this, but right where my
I do.
That's your buy signal. Now, conversely, again, here's another one.
It's so interesting. We were just talking about that day, December 26th, right before you came on.
Really?
Yep.
Yeah. Here is the buy signal right there. You're right here. Now this one worked for 2 days, and then you better get out of town. But here's not a buy signal, but it's a close signal. What happened there? Well, you got a closing low down here, and 3 days later you close a little bit lower, but that's okay. Over here, once again, you can see how these work. Here you had a fake one here. You went up, you came in here. The real buy signal is probably right there. Yeah. There it is, right on this bottom. So are they perfect? No. Are they pretty good and helpful? Yeah, if you mix them with a bunch of other things, It's like a gin and tonic. It's one needs the other, right? It's probably horrible. It's a horrible analogy, but these things work better with friends that agree. Gotcha. Here is the opposite. Now you notice we haven't been able to get underneath this line, and underneath it is a sell signal. So, I mean, here you're close. Here's a sell signal. Here you're not very close, but you're at least getting a turn. Here's a signal. In bull markets, VIX buy signals work better. In bear markets, VIX sell signals work better. But that's essentially the VIX signal right there. Now, if we go back, where was I? I was on the indicator page here. Here's another thing. I run an RSI on the VIX. We're down at 36.76. Now, a VIX buy signal, where you want to see the RSI on the VIX, is under 40. If it's under 40, you want to sell. You want to be a seller. I mean, look up here when it's high. When it's up here, there you want to be a buyer. When it's up high, here you've still got a move going. But down here, you want to be. Remember, this is VIX. This is the market down here. So again, to look at it here, that's a buy, that's a buy, and then when you're down low here, close to this, that's the sell, and boom, that's where it happened. We're way down. We were very low here. You can see that you're not anywhere near the. I mean, right here is one place, and that's just because you got you had a washed out market, kind of like we had over here. you're getting overbought and oversold a little more quickly than normal. But this is way down here, and it's been down for a while. You don't very often see this. So this would say that we're a lot closer to sell than we are buy. Here is this is the advanced decline line right here. This is the 10-day average of the AD line. This is 30-day average of it. So when you get really stretched between these, like, generally, that's a place where you're going to get a turn. Look what happens over at this top over here. You can't go anywhere. This comes down and breaks through here, which, by the way, is a pretty good sell signal. And then you're breaking down through here, and over here, it starts here. This is August 21st. And then that's telling you, it's time to get out. You come down here and bottom, have a weak little rally here, and come down. You've got a divergence here, which is saying sell here. You've got a bigger divergence here, which is saying sell here, and then of course, boom, you come apart. This thing has just been ridiculous. It's like, I mean, these are the type of readings that you get. That, like, if they said, look, at the Federal Reserve has printed money, it's giving it to all of you on one condition, and that means you have to invest it in the stock market. I mean, that's that's what it looks like here. It's really, and again, here we are up against the Bollinger Band. So anyway, to answer your question, in these, looking at all these things together, and also things like this, are the kind of things you look for to see if you're getting a confirmation on what you're looking at. I mean, for me, my indicator. Let's see. I don't like these.
Do you ever look at these indicators intraday, or is it always on a daily chart or longer?
Oh yeah, no. I use the 65-minute a lot. Now, here's what's happening. This is a little oscillator that I have. I mean, essentially, is when when the red goes through, buy it, yep. And then unless it goes through again, stay with it. So this is saying buy here, and you're still in. Yep. Nothing, no reason to get out. This, when you cross over, gives you a sell when that happens, and here it is. So these signals are okay, but the market's continuing higher. So this one's keeping in. Now, when I'm going up here, again, this is saying stay in. You're losing some momentum here, but you gain it again here, and here you're losing momentum, but you're not turning down. So far, this is good. I mean, what I do, the ones that I look at, I mean, you say on the shorter term, I'm looking at this. This is 65-minute, which I like to look at a lot. Now, it's you've gone higher than over here, so it's not going to be a divergent signal, but you might be setting up a divergence now. So if we go up a little bit higher and then turn down, maybe that's going to give you a downturn. But I mean, you've come up, high level consolidation, little correction, come up, high level consolidation, higher, high level consolidation, no correction, higher, high level consolidation, move higher. I mean, it's just ridiculous, the way that it's gone.
On the S&P March E-mini contract, our zone overhead is 2791/92. That's on the S&P 500 E-mini.
What's that? The March contract? Well, this is the daily cash here.
Yeah, I know what you're. That's why I wanted to differentiate that. That's where we're looking for potential resistance overhead.
Where is it?
2791/92.
Let's see. Here's the daily 81-minute. That should be. About 10 points above where we are.
Yep. Now we're going to get the Fed minutes here in about 25 minutes. Jerome spent quite a bit of time talking and answering questions when the announcement came out a few weeks back. I don't see how there could be much new news on the table. So do you expect any kind of a reaction to the minutes today?
You know, I don't know what he can say. I mean, I saw an interesting write-up, and it was going back a little while, and they were saying that not very long ago, but something about the Fed probably going to be tightening and so forth. And then about a week later, they came out and said that if necessary, there'll be endless QE, whatever, interest rates will be kept at zero. And I'm thinking, like, what? You know, it's just, I was going to put it in the newsletter, but I thought, you know, here's a complete reversal, which of course caused the market to rally. In reality, you know, when you do that kind of stuff, I mean, and people say, you know, the argument on, you know, whether Obama did a good job or not. It's like, wait a minute. If you're president, if you're going to be president, what you want is to come in at the bottom of a recession. There's no better time. There's no more advantageous time to start than at a calamity, because you can blame it on the guy before you. Right. Number one, it's like, yeah, I'm going to start on December 24th. I'd like to be president on December 24th and say, oh, look at me. I made the market rally 400 points. I mean, Obama had that opportunity. In addition to that, he had two other opportunities. This is why I have no idea why Republicans don't have any brains anymore. I mean, some of the things that they could just say, you know, somebody will give them an argument and they can't think, so they can't say anything. I'd say, well, I said, regardless of whether you're a Republican or a Democrat, or you can't stand either one of them, or you like them both, or whatever, it doesn't matter. I said, here's the deal. There's no president in modern history that was better positioned than Obama. And again, it doesn't matter whether you like him or not. I mean, the guy was given a gift. He started at a collapsed bottom. In addition to that gift, he was given two things that no other president in history was ever given, because they didn't have it before. That was QE, quantitative easing. Yeah. And the second thing was zero interest rate policy. It's like, excuse me, let me get this right. You're going to create zero interest rate policy? What does zero interest rate mean? It means that money has no value. That's what it means. And I go, well, right? I mean, and what's my argument on that? My argument is simply this. If money has value, if I'm going to put my money in your bank, I'd like some interest for it. Thank you. Oh, no, I'm sorry.
Yeah, but, you know, there's a whole... there's a whole class of people out there who don't know what it is to earn interest from a bank.
You know, sadly, there's a whole class of people out there not conflicted by age that have forgotten how to think. I mean, if you went back to the 1950s or 60s, Republicans and Democrats, I mean, some of these things, again, I'm not being political here. Does it make, if you went back to the 1950s and you asked Republicans or Democrats, do you want to have an open border? You know what the answer would be. There would be no hesitation. Of course not. Are you out of your mind? That would be the answer. Of course we're not going to have, have you lost your mind? That would be your comment. It comes from Democrats. By the way, we've got movies of Bill Clinton and Chuck Schumer and Hillary Clinton and everybody else, Nancy Pelosi, etc., all talking about the importance of a stronger border. I can get you videos on every one of them. And if I was President Trump, I'd have a fireside chat, kind of like FDR had. Right. And who knows? I mean, you know, the CNN or you know, if you went out and you know, were the magic fairy and did wonderful things, CNN and MSNBC would somehow criminalize it. But you know, it's
and demonize it.
Exactly. You know, so it's just the thing here that I think is you know, people just are no longer thinking. I mean, that situation on the border, I would have a fireside chat. I'd sit down and I'd say, here's why we want to have border things, and it's very obvious. And in the past, this was never questioned. And oh, by the way, here's Bill Clinton talking about it. Notice that he's a little bit more vocal on it even than I am. Oh, and here's his wife talking about it. Here's Chuck Schumer talking about it. Here's Nancy Pelosi talking about it. So whether they believe that or not, and the question number two, if I was going to ask this to some of these people, I said, listen, you want an open border? I said, that's fine. Everybody's got an opinion. Why on earth would you want to have that? Because here's what's happening. What you're having is illegal people, or at least heretofore illegal people, and we're going to give them free food, free money, food stamps, free education if they want it. We'll let them have their babies free of charge. Now, if you're a citizen, we're going to charge you for all these things, by the way. So if you're a citizen, you get to pay for it. But these guys don't get to. I said, could you explain that to me? I'm not intelligent enough to understand that. And by the way, New Zealand, they don't want you to come in across their border unless you bring something of value.
Well, I was just watching. There's a on Netflix. There's a show called Border Patrol. I think it's called.
Yeah.
And
interesting.
Last night I just happened to be clicking through, and I clicked on it, and it was about New Zealand. And yeah, they are pretty strict about who gets into their country.
Well, their thought is, why do we need you in our country? I mean, unless we have a specific need. If we have a specific need for workers, then we'll bring some workers in on a work thing and do that. If we don't need you. And oh, by the way, if you want to come in, then what do you have to offer us? I mean, my thought with Democrats, I say, or the liberals, is I say, hey, listen, why are we bringing these people in? Oh, well, because they're poor and they could get. I said, well, we're not rich, by the way, because we have debt. If we remove the debt, we're poor too. But forget that, because I understand it requires thinking, and I don't want to give you a headache. So, let me say this. You people don't want to discriminate against people, right? Oh, no, we don't discriminate. I said, good. I said, that's a good thing. I said, there are poor people throughout the world. I mean, China has a ton of them. India has a ton of them. And Africa's filled with them.
Yes.
I said, so my thought is, why are we just taking these people from Central America? Shouldn't we take our tax money and use it to provide transportation for all the poor people in the world to come here? Wouldn't that be a good idea? Because why? Because obviously we're discriminating. We want these people that are amassing on the other side of the border to come over. And I think that's wrong, because we're discriminating against the other people who have the desire to be here just as much as these people do, but they can't afford to get here because they're in Africa and India and places like that. Don't we need to take some of our large vessels and bring these people over and pay for it? And then they look at me like I'm crazy. I said, excuse me. I said, pardon me, but I'm using your argument, and I don't want to discriminate. You apparently want to discriminate, and you said you're a liberal. Apparently, I'm the liberal in this case. So why wouldn't we do that? By the way, the people that we're bringing over, they're going to vote Republican. Would that be okay? Then they get screwed up and they flip out and walk away. But we've stopped thinking in this country, and there's a very good reason for it. I'm not trying to take by the way, I'm not impressed with my view on politics, and who cares? But since I asked, my view is simply this: give me the person whose policies want to go more toward freedom and what once made this country great. Forget the make America great again. I mean, that's great, but everybody says it. I want the guy who really wants to do it. And in order to do that, I think we need to go toward freedom. And by the way, socialism is not toward freedom. Socialism is dictatorship by definition. I had a conversation with a woman at the airport. She says, oh, no, I don't think so. I said, well, ma'am, it's kind of like Tuesday is a day by definition, but please look it up. Socialism is dictatorship. That's what it is. And sometimes it's done with an oligarchy or whatever. But the other thing is, these people who are coming here are coming from socialist countries. So why are we wanting to vote in socialist people like,
like Bernie Sanders?
Or any, name them, Kamala Harris, don't stop there, the whole group. Everybody's a socialist. And why would you be a socialist? And why would you Why would you think it would be okay to bring people in? Oh, we want these people to come in because they'll be Democrat. I said, excuse me, you took an oath of office. Isn't that going to tax an already taxed nation that has a great deal of debt? Oh, yes, but we're doing it because they'll vote Democrat. It's bottom line, Dwayne, that's why they're doing it. And some of the Democrats think that's a good idea. It's not a good idea. You know, everything's a question of left and right when the question really ought to be right versus wrong. Democrats in the past always made that decision of right versus wrong first and then left versus right. But we've completely tossed that out. Now it's left versus right. Whatever the left, by the way, if you guys wondered, it's wrong, but such as, you know, the border, but we used to be in favor of the border until Trump was in favor, and now we're against it. It's just, we've lost, as a nation, we've lost.
This entire circus has just, it's spun out of control.
It is, and I'm not impressed with, again, at this stage, you run the risk of losing your country. And
no, you really do. You certainly run the risk of losing the respect of the rest of the world.
I mean, I'll tell you the history.
Perception is everything. Perception is reality.
Yeah, the history I've mentioned before, at least as far as governmental history, when you start out with a republic like Rome or Greece or whatever, sooner or later, when the politicians realize that they can promise the voters money from the treasury, they do. And then you change from a republic to a democracy. You know, there are no democracies. You know, you're either a republic or a dictatorship. We called ourselves a democracy, but just because, you know, it's like somebody, you know, 4 feet tall calling himself tall. It's all, you know, it's who are you talking to? You know, but anyway, that's the, you know, that's the problem in a nutshell. We've just gotten away from, we're not thinking anymore. And you notice that, you know, I mean, I find it interesting if I say, hey, why don't we talk about nuclear physics? I mean, and you may know about it, but if somebody were to say that to me, I'd say I'd love to, but I said, I can't really have it. I don't have anything to contribute. And by the way, if I did have something to contribute, it probably wouldn't be of any value. So you know, deal me out. I'm not going to do you any good in that conversation. But if you notice that everybody's a political genius, you can't run into anybody who doesn't have a strong political opinion anymore.
Or they're running for president.
Yeah, and isn't it true that politics, if you really look at it, is probably more complicated than nuclear physics? Because if you really want to make...
Certainly more convoluted.
Yeah, I mean, first of all, you've got to know about sociology, you've got to know about economics, you've got to know about the stock market, you've got to know about international currency, you've got to know about international trade. You have to really be knowledgeable in these areas. Now, granted, some presidents would prove me wrong on that. And many candidates would prove me wrong. But really, you've got to know about those things before you have an opinion. Because if the conversation gets around to what are you going to do on taxes, and by the way, what effect would that have on the dollar, and what do you think about, you know, whether we should have a gold standard or not, all of a sudden your people are falling off real quick as far as being able to give you a quick and intelligent answer. But boy, they've got an opinion, and it's a strong one, and their vote counts as much as yours or mine. So what I'm saying is we're in trouble. You get a period where you go from republic to democracy to dictatorship. That's the evolution, and it's the same evolution as you get from caterpillar to cocoon to butterfly. It's just the way it doesn't go in any other direction. That's the way it goes. We have been a republic. We're supposedly a republic, but we're not acting like one. We've been a democracy since I was a child. At least we've called ourselves that, and that's wrong. We got away from what we were, and now we're a socialist state. Much of what we're doing is already socialist. We're trying to get socialized medicine. Why? I don't know. Read Saul Alinsky's book. It's #1 on his list. Why would you be wanting that? That's how you get control of the people. And the useful idiots, there's always a group of people that are termed the useful idiots. And those are the people that the people who want to take control and become the dictators need to have to support them. So you get them one of two ways. First of all, you buy them. So you buy them, you promise them a position when you take over, and that's what's happened to both a lot of Republicans and Democrats. And then with respect to the others, you control the media and tell them whatever you need to tell them to get them to agree with you. Oh, and if you're really smart, you brainwash them by making them angry, because you know that if you're goal-oriented, if you're a person who's goal-oriented, what does Tony Robbins tell you? Have your goals, but attach emotion. Attach emotion to your goals, and they'll happen. They'll happen faster. Yeah, right? This is straight out of Tony Robbins. I'm not saying.
No, you're right.
But what they've done, and it was Edward Bernays who started the advertising in this country a long time ago, was the same thing. Emotionalizing. So it doesn't matter if you lie. See, in the old days, we all grew up with the golden rule, and I cannot tell a lie, I cut down the cherry tree, don't lie and treat others as you would like to be treated. But they're not teaching that anymore. They're teaching, hey, lie is okay. If it meets an end, it's okay. Ask college kids. They'll tell you, is lying bad? Well, I don't know. It depends. In the old days, it didn't depend. The answer was no. It's bad.
Yeah.
And the golden rule, the golden rule now is he who has the gold makes the rule. Now, that's a rule that's been there forever. But the golden rule is the one that we all should know and follow. It's the only rule that you'd ever need to rule a country in reality. In other words, you don't need all these laws. Give the law that God gave you. Do unto others as you would have others do unto you. Oh, this guy stole my wallet. Excuse me. Let's not waste a lot of time here with your lawyer things here. Excuse me, do you have a wallet, sir? Other than the one you just stole? Oh, yes, I do. I said, do you mind if I steal it? Yeah, I do. I said, bingo, this case is solved. Next. In a divorce. How about in a divorce? The golden rule. You split things into two things, and you give somebody the choice. And the wife says, I'd like to take the house and the boat and the car and the bank account. And, we'll give him, something. And you go, fine.
We'll give him the mortgage.
Yeah, we'll give him the mortgage, or the other way around. I'm not trying to pick one over the other. But then you just go to that person and you say, well, would you like it if it was done the other way? Because that's the way we're going to do it. And then they have a connection to it. It makes life easy. God gave a rule that there should only be one rule. Oh, gee, you just murdered that guy. Would you like to be murdered? No. Okay, you're guilty. Next. I mean, do we have to think very hard? Theoretically, we don't. We don't think at all anymore. I mean, it's really, this is a characteristic of this evolutionary cycle from republic to democracy to dictatorship. We're right on the doorstep of dictatorship, and half of this country is in favor of it, and they put up a whole bunch of candidates that are pushing it. Now, here's the difference. Why would those candidates do it? Are they stupid? Well, I can think of a couple of them who definitely are, and one of them who's the kind of a nice, pretty little gal, but she's kind of removed. She single-handedly has removed the dumb blonde jokes. I mean, she's done a favor for a whole lot of people who hate blonde jokes.
But she's only 12.
Yeah, exactly. And here you've got knowledgeable people following her every word. So I mean, we've passed the lunacy mark. By the way, I got a quick chart for you.
Let me ask you a question about this chart before you take this one down. You see the red arrow you got there in the middle of the chart at the top, at the high. So as you go to the right, you see those three peaks as the market was moving down.
Yeah.
So you had a high, a lower high, another lower high, another lower high, and then we put in the low. And now we're knocking on the door of potentially another lower high, which ties in with exactly what you were talking about. So that would be, again, a high up where the red arrow is, followed by a lower high, another lower high.
I'm not sure if this November 7th high is lower than this one. This one is October 20th. It is on the
Emini. Yeah, hover over it and get the price.
Oh, okay. Yeah, I'm on a dead chart here because this is from my newsletter.
Yeah, on the it is lower.
But I'll show you something funny or interesting. Do you know the Fibonacci retracements and all that stuff? And of course, Fibonacci is done by time extensions too. And I made the argument in my report. I said, let's look, if this market's blown through everything. It's blown through a 50-day moving average, 100-day moving average, 200-day moving average, 382, 50%, and 618 Fibonacci retracements, and pretty much everything else. What hasn't it blown through? Well, some of the things that I already showed, but one of the other things that's kind of interesting, and I sent this to Bob Prechter, and I said, if you take the January high over here, the first arrow, and you go over to the September high, you find that that's 165 trading days. If you come forward in a Fibonacci 382, which is this green line, or a Fibonacci 50%, or a 618, the brown line, here's what happens. First of all, the 382 is 1 day off the low, so the 382 is pretty good. I mean, you're 1 day, the next day is the low. Here, the 50% is 1 day off the January 18th high, and that's before. So if you average those two out, they're right on the money. And here's the 618, right here on the 19th, which is the day of the full moon, and when the NYSE came up to the trend line, and a bunch of other stuff. Now, this will either be another mega failure, and the market says, see ya, we don't care. Or one of these days, I would think you're going to have a correction unless they've been outlawed and nobody told me. You know, it seems like we're kind of getting where that should be the case. So anyway, let me see if
I'm just curious. You know, I opened up John's mic a minute ago. I saw him out there. John, are you there? John, are you there? Okay, he's not.
Huh. Oh. Anyway, and so that's there. Just a couple of other things. This is this is the entire bull market from 2009. It's 2009 low closing price, and both of these channel lines cover the entire bull market. There's nothing peeking out on either side. This red line in the middle is just kind of a best fit line, and I did it through the closing prices and also with the bar chart doing the same thing. And this line here is the line where if you draw this line at that angle and move it up or down, you can't hit any more points than this line. In other words, this is the maximum hit line, and we've rallied right into that one. That should be some form of resistance, if they haven't outlawed corrections. Here's a huge divergence showing at this high here, and then we got way oversold. Let me see if there's anything else. Oh, the only other thing I put in there is it looks to me like gold might be getting a little bit stretched out on the upside, but
it's been a very impressive rally to the upside.
Yeah, very impressive, and from October, so it's been lasting for a while too. But anyway, I'm kind of that's about all I've got, and I don't know if it's worth anything. I think these are
I think it is.
I think these are all pretty valid things to take a look at. So now would seem to be a time where it might be a pretty good idea to exercise some caution. And much of this rally has been because of the assumption that China was going to do something, and that's the funny thing about it. It's all based on assumption, and nothing has happened. And I saw a guy being interviewed this morning, and he said that he didn't think there'd be an agreement there for months.
Yeah, I think the slope of hope's about to run out.
Yeah, one would. You wonder though. It seems to be never ending. But anyway, it's too bad John wasn't on. Say hi to John for me when.
Hey, and I'm really glad that you had some time to come on today, and let's try to get back on track and do this at least once a week.
Yeah, this maybe today was a good day because we finally, we had the 19th yesterday, and this thing here where lots of things are kind of coming together. So it would seem that the timing might be good, but who knows? Anyway, well, thank you so much for...
Thank you, Garrett. It's been a pleasure, and I look forward to talking to you again soon.
Good deal. Thanks so much, Dwayne.
All right. Take care.
Okay. Bye-bye.
Okay, guys, let me pull the chart back. And there we go. All right, we got the Fed minutes coming up here in about 10 minutes. Hang on. We'll see if we get any kind of fireworks. Now, take a look at this. We had the run up, the run down, right back into this sticky little area. Run back up. Get a high, lower high. So what happens here? What new news could be in the Fed minutes? None that I can think of. Now back to the daily chart for a second. Okay, here's the high. There's a lower high, another lower high, another lower high. Not a lower high by much, but a lower high nonetheless. And then here's the day Garrett was talking about, that we were talking about right before we came on, December 26th. The huge bull candle, a leg and a retracement. Cleared the BBC, bullish cross, leg and shallow retracement, and a leg and a shallow retracement. And here we are. Here we are. Everything he just said, and here we are. Now, the monthly, here's what we look like. Now, on the slingshot, we've not had this since 2013. About to cross the 50-yard line. Okay. Since this up, this down. Okay. How many times have we seen this on the range chart or the 30-minute chart or any chart? Move up, price pulls back to the BBC. Run up, hit a red CFMA1, red and falling, and roll over. If that happens, if we found a place for a pullback, well, let's take a look at that. From the low to the current high, shallowest retracement would be the 24. The 38 brings us to 2606. But have a look here. If we just run right across here, like 2640 to the downside. Now that's 130 points below us. If we just drop back to the 24, that's almost 100 points below us. So the shallowest retracement, even a retracement back to this swing low right here, 2690, that's 80 points. Not predicting the market's going to turn or crash or fall, but I will say, as Garrett did, we're certainly due for retracement. And what better place, technically, for it to happen? All right. If on the Fed minutes, in 7 minutes, we get a pop to the upside, just remember this is this week's weekly trading zone overhead, 2791/92. So if we punch up through here, you have to expect this to be good resistance until it isn't. If we take out this weekly trading zone overhead, that's a good thing. Then we want to watch to see price hold it on a pullback, and then we can trade it north. If we fail, we know how to trade it back down. But in order to do that, you got to pass through this area again. It's quicksand. We have to get away from this area before we're going to have any real tradable trends. That's just that's the reality. While we wait on the Fed minutes, good word for the day. Talk about saying the right thing. How many times have you said the wrong thing? Oh, that's a rough feeling, right? Exodus 4:12. I will help you speak and will teach you what to say. Sometimes we excuse someone's critical attitude by saying, oh, his bark is worse than his bite. Now, it's true that a dog's bite can hurt, but so can a dog's bark. It can traumatize a child and leave them filled with fear. Think about the comparison. Do you want to be likened to a dog? Sometimes it's necessary to confront someone in order to set healthy boundaries for your own good or to keep them out of harm's way. But Jesus spoke with compassion much more often than he spoke with confrontation or condemnation. Writing about her early experience as a believer, Karen Casey Arneson says, I re-entered the kingdom, scarred and bleeding, hoping to find healing for my wounds. And I did find some who bathed my bite marks and bound up my old wounds. And I also found out there are cannibals in Christendom. Though you mightn't recognize us, we're the sweetly smiling sisters who bite your back when you turn away. The nosy Nancys who come sniffing around for the scent of some juicy morsel of gossip. God warns in Galatians 5:15, if you bite and devour one another, you will be consumed by one another. Psalm 34:8, strength to resist our natural appetites comes through satisfying our hunger, and at another source, Psalm 34:8, taste and see that the Lord is good. The nature we feed is the nature that grows strong. And without vigilance, we can easily fall into old habits. A little snacking on this one, a little taste at that one, and before we know it, we've unleashed the cannibal within. While we're called to help our brothers and sisters caught in sin, we're also cautioned to watch, or you also may be tempted. Galatians 6:1. That's our good word for the day. And as my grandmother said, if you don't have something good to say, just keep your yap shut. Pretty basic, pretty simple. All right, we got 3 minutes, 2.5 minutes. We'll hang out and see how this goes off. Jockeying for position. And stand by, we got 2 minutes. Where's gold? Gold coming off. Crude. Handy little run up in crude today. All right, we're down to 1 minute.
Leverage. Also made a comment on the Mueller reports. We always talk about when it will come out. As a new Attorney General, the President has just said, and this is crossing on the wires, the release of the know what the report is, what it contains.
Okay, here we go. 15 seconds.
Who used to be the old Attorney General, Bill Barr, is now officially in office. Anyway, Scott, thanks a lot, man. We'll talk to you again soon. Got to wrap it up to get to the end of the show. As you look at the president moments ago with the young chancellor of Austria, 32-year-old Sebastian Kurz. All right, that wraps it up for Carudo Coast to Coast today. I'm Conal McShade for Deal. See you after the bell, 4 p.m. Eastern Time. Right now, it's time for Charles Payne. Take it away, Charles.
Thank you very much, Conal. Good afternoon. I'm Charles Payne. This is Making Money. The Federal Reserve releasing their minutes of last month's meeting as we speak. We're gonna have a chance to see exactly what they discussed that made them halt interest rate hikes. In fact, make a 180-degree turn. We're gonna also have a live report and up-to-the-minute market reaction on all of this. And speaking of markets, they have been flying high of late. The Dow Jones Industrial Average hitting session highs just moments ago.
You know, he makes a good point. Now, I've been asking the question all day, you know, what new news could there possibly be? But Charles Payne just posed the question, what was it that made them do such an incredible about-face? Why did the Fed, who was aggressive on raising interest rates, suddenly almost look like a scared man standing up there, or worried? And I think for more than just job security. So, nothing explosive yet. Let's look at gold. Pretty quiet. You can see volume here, in the bottom right-hand corner. And there's volume on the S&P. There you go. Now you can see it. Yeah, it's picking up. Okay. Now, is the gold going to run the other way? Or is it going to run with it? Oh, there's gold. Okay. All right. So from the swing low to the swing high. Shallow retracement for gold puts us, well, we're already at the 24. Below that, the 38's down at 1340. We got a weekly zone there. The next zone down for gold will be 34.35, and that puts us in line with a 62% Fib retracement. Get back to the S&P. S&P not quite as much direction to its move as gold. Side by side, dueling markets. And we had a zone up at 46.47. Market bumping up against that earlier. Now below us 35, 36, 34, 35. Now we're here on the S&P. This week's zone overhead 91/92. And below 61/62. I'd really have loved to see this pop out of the top and head higher, only because this move down just takes us right back into the quicksand, the muck and the mire. All right. Okay, so no immediate explosive move, just a lot of back and forth indecision. We'll see who takes the lead. That's going to wrap it for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.